Hey guys, Brett Elliott with APMEX here. This is the final segment of our interview with Trevor Raymond, the CEO of the World Platinum Investment Council. In our first two videos, we talked about the supply and demand fundamentals for platinum. And in this video, we're talking about investing in platinum. If you want to see more videos like this, please like, subscribe, and share. It makes a big difference in our ability to continue making these videos for you. And now, part 3. That's actually a perfect segue to the next question, which is we want to talk about its investment potential. Sure. And, as we've said before, leading up to 2008, platinum hit over $2,000 an ounce. I think some of that was maybe spurred by platinum prices were going up. And some of the manufacturers that needed it started stockpiling sometimes 6 months worth in advance. And so there was a kind of a gold rush towards platinum, it sounded like. And that was partially driven by a scarcity situation. So we're kind of seeing some similar things. I think back then there was also supply shortages driven by electricity issues in South Africa. Absolutely. Is history repeating here? I guess some of the questions people might have are, could we see platinum going back up to $2,000 an ounce again? Is that the ceiling, or could it go even higher?
Sure. So as the World Platinum Investment Council, we're funded by South African mining companies, and our role is to increase demand for this metal in investment. We don't typically forecast price, but we can easily observe what has occurred in the past. So you're quite right. In 2008, 2009, there was electricity grid problems in South Africa. In fact, that's where a lot of the problems that are being experienced today sort of first reared their head. That was quite acute, though. The grid nearly fell over completely, and there wasn't a great awareness of just how much trouble the grid was in. So in the years that followed, that crisis allowed them to get a really good grip on it. The grip didn't solve problems, unfortunately. So what happened there was two things. One, there was concerns about supply. We'd also seen quite a run-up in all commodities. And the other thing was that the demand for platinum had grown at about a 14% CAGR because of Europe's demand for diesel passenger vehicles. So there was strong demand growth and curtailed supply. What we're seeing right now is, for the first time in those 8 years, strong demand growth on the back of curtailed supply. And that's why this platinum price weakness for many years, there's really not been a demand growth story. There's been a demand contraction and a supply contraction, and that's much harder to get your head around. So that's why I say that the thing that's making platinum look really interesting now is that you've got this really constrained supply with an inability to respond and a demand growth segment. So I think, yes. Could it go beyond $2,000 an ounce? No reason. I think when platinum actually went to $2,100 an ounce in 2008, 2009, there were no industrial uses of platinum that squealed. They didn't suddenly say, oh, it's too expensive to make a car, the catalyst doesn't last as long. We're not going to make nitric acid using platinum anymore. So platinum can actually, at an industrial level, tolerate a really high platinum price, pretty price inelastic. And the interesting thing is that as more people become aware of the deficit and the demand growth story and constrained supply, investment demand could actually do the opposite, and that more people holding investment, either physical borrowing coin or ETF, would even tighten that deficit that we've got. We buy our 1 year outlook from an independent third party, mainly because of antitrust reasons, but we've started producing a 2 to 5 year outlook. And in that 2 to 5 year outlook that we've just recently published, we're seeing consecutive deficits for the next 5 years.
Wow.
From 1 million ounces this year growing to nearly 1 million ounces in 5 years' time. Now, those consecutive deficits with constrained supply and demand growth, that's really interesting. And I think not many people are aware of it. So, we're just trying to get that out for people to understand that.
And when there is a deficit, typically we take from above ground stocks, right?
Sure.
So where are all of those above ground stocks right now?
So above ground stocks, a long discussion, a bit of a mystery, but the issue is we know the market always clears. And Johnson Matthey's been publishing statistics on supply and demand since 1975. And typically, where there's a deficit or a surplus, either that metal comes from above ground stocks or goes back into it. And you can do various approaches to evaluating it. We publish an above ground stock number, and at the moment that looks like it's about 6 months of stock. However, China's been importing almost twice what they've been using for the last 2 years. And we think about 80% of those above ground stocks are locked up in China. So suddenly it's making the rest of the world quite tight. And if we go back and look at what happened with palladium, there were deficits for years and years, and everyone said, oh, palladium price will never go up. There's plenty of availability, until one Wednesday afternoon there wasn't. And then it turned around and went from 300 to 3,000. So it kind of feels like platinum demand growth is likely to get to a pinch point where price will need to respond to attract those above ground stocks. And typically, I mean, we did a lot of work when we launched 8 years ago to understand those stocks. We had another pass in 2019 to say, look, these are typically held in vaults owned by people. And in fact, if you look at the growth of ETFs, the ETFs made some of those above ground stocks visible. And during COVID, we saw the NYMEX futures market, the NYMEX warehouse stocks, that increased by 500,000 ounces. Mm-hmm. So it was quite sort of encouraging to see that people talk about above ground stocks, but suddenly 500,000 ounces of those above ground stocks, which were typically held in large bars in London or Zurich, they were turned into 50-ounce bars and shipped to New York. So that visibility suddenly says, okay, we do know that above ground stock is alive and well and functioning and will when it needs to. However, you just need much higher prices to attract that metal availability to clear the market.
Got it. Great. Thank you. And I think probably the last question I would have is, and you might have already kind of answered this about, there's going to be a pinch point, but is there a particular catalyst that people should be looking out for, or set of catalysts in terms of, watching for a large price movement in platinum?
Yeah, it's a good question. I mean, I think it's the holy grail.
It's the age-old question. Yeah.
So when I'm asked, the one that I normally give is the fact that right now, most of the people that trade platinum are the people that are trading gold. So there's a lot of people around the world that trade gold on a daily basis. And what they do know that if gold moves up $30, platinum goes up 35 or 40. And if gold goes down $20, platinum will go down 25. There's no logic as to why it is, but it's very well trusted. So if you look at the price movements of platinum and gold, they're pretty close, and they tend to be almost look like they're joined at the hip. So what I look out for is when those two separate. So when you've got gold that's either flat or declining and platinum starts to pick up, that's when I sit up and take notice. So if somebody does watch that, is this platinum disconnecting? And right now, platinum's heavily undervalued compared to gold and compared to palladium. So there's a good case to say that the platinum price should go and sit much closer to where palladium is, or a bit more. And there's no real logic why platinum shouldn't again, as it has for many decades, be higher than the price of gold. So I just think watch that breakout away from gold, certainly, and then just watch the fundamentals and what happens to those above ground stocks. Be sitting with a 1 million ounce deficit. Typically, if I said to you in any commodity market that you've got a 10 or 12% deficit, people would flood into the metal. The reason they're not is that so many people have been so disappointed by platinum for the last 10 years, they're just too afraid to get into it. And that's understandable. So for those that haven't touched it before, having a look at it, it's interesting. We've tried to play with a straight bet for the last 8 years. I strongly believe that investors don't want good news. They just want news they can trust.
Absolutely.
So if we can give them as much insight and make them comfortable that you can actually look at this market, make some sense of it, and then, through people like yourselves distributing the product, making it available, is the other side of our business. We work with partners to make sure that if somebody does want to own platinum, that it's not difficult, that they've got access to an ETF, to online vaulting, and to physical bars and coins. It's really important. So that's why we're two sides of our business, and we really are committed to making it easier for people to own this. And, we've got a website, platinuminvestment.com. All our research is free. And if anybody has got a specific need, we work with a lot of information partners like the CME. In their training sessions, we do bespoke content for them. We do bespoke content for a lot of our partners. And really, we just want to make it easier for people to understand the metal. And if they choose to, then own it as well.
That's perfect. And I think that's a good point to wrap up. If you do want to invest in platinum, we do have these products for sale on APMEX.com. You can buy platinum rounds, coins, bars, just like you would gold or silver, and liquidate when you're ready. That's all we have for you today. Thanks for watching, and we will see you next time.